Look at a $100 bill. Benjamin Franklin stares back at you with that knowing smirk. But here's what Franklin couldn't have imagined. That piece of paper in your hands is the most powerful weapon in human history. More powerful than nuclear bombs, more influential than the internet, more transformative than any technology ever invented. That dollar bill represents something unprecedented, a single nation's currency becoming the world's money. And the story of how that happened? It's not the story you learned in school. This isn't just about American economic dominance. This is about how the United States accidentally stumbled into the greatest financial empire in history, then spent the next century learning how to wield that power. From the California gold rush to the digital revolution, from Bretton Woods to Bitcoin, this is the story of how America didn't just get rich, America became the bank of the world. And now, for the first time in 80 years, that dominance is under serious threat.
The information presented in this video is for educational purposes only and represents general historical and theoretical perspectives. Always conduct your own research and seek professional advice before making any financial or investment decisions.
Imagine the United States in 1850. No income tax, no Federal Reserve, no standardized currency. Just a chaotic patchwork of over 8,000 different banknotes issued by local banks, railroad companies, and anyone who thought they could get away with it. Counterfeiting wasn't just common, it was a legitimate business model. An estimated 1/3 of all currency in circulation was fake. Merchants carried guidebooks to identify real money from forgeries, updated monthly like restaurant menus. The California gold rush changed everything, but not in the way you think. Yes, it brought $2 billion in gold into the economy, equivalent to $60 billion today, but more importantly, it created America's first truly national economic event. For the first time, money was flowing from coast to coast on an unprecedented scale. But America wasn't still a monetary superpower. That title belonged to Britain, whose pound sterling was the world's reserve currency. British banks financed American railroads. British investors owned American land, and British merchants set the terms of international trade. The Civil War forced America to grow up financially, fast. The Union needed to finance the bloodiest conflict in American history. Traditional taxation couldn't cover it. So, Treasury Secretary Salmon Chase made a radical decision: print money not backed by gold or silver. These greenbacks were pure fiat currency, their value based solely on faith in the Union's victory. Confederate currency followed the same model. By 1865, Americans had learned a harsh lesson about the relationship between government power and monetary value. When the Confederacy collapsed, so did Confederate dollars. Overnight, completely, permanently. The message was clear: your money is only as strong as your government. But here's what most Americans don't realize. Even after the Civil War, the U.S. wasn't the dominant financial power. That transformation required a perfect storm of European catastrophe and American opportunity. World War I changed everything. By 1914, Europe had spent centuries building the world's financial infrastructure. London was the global banking capital. The British pound was used for international trade from Shanghai to Sao Paulo. The sun never set on the British monetary empire. Then, Europe decided to tear itself apart. World War I lasted 4 years, consumed 16 million lives, and cost the equivalent of $3 trillion in today's money. Britain, France, and Germany, the world's financial giants, spent themselves into bankruptcy funding the war machine. America, sitting safely across the ocean, became Europe's arms dealer and banker. The transformation was breathtaking. In 1914, the United States owed $3.7 billion to foreign creditors. By 1919, foreign nations owed America $12.5 billion. In 5 years, America went from the world's largest debtor to the largest creditor. But the real masterstroke wasn't the lending, it was the Federal Reserve. Created in 1913, the Fed was initially designed to prevent bank panics. But World War I revealed its true power, the ability to create dollars on demand. While European central banks drained their gold reserves to finance the war, the Fed could simply print more money. The 1920s cemented America's new status. While Europe struggled to rebuild, American companies went global. Ford, Coca-Cola, and Hollywood exported not just products, but the American way of life. The dollar followed American culture around the world. Then came the Great Depression, and America almost threw it all away. The stock market crash of 1929 triggered a global financial collapse. Bank runs spread across the country. Industrial production fell by 50%. Unemployment reached 25%. The American economy, which had seemed invincible, was suddenly in ruins. President Herbert Hoover tried orthodox solutions, balanced budgets, high interest rates, faith in market self-correction. They failed catastrophically. Enter Franklin Delano Roosevelt with a radical idea. Maybe the government should actually do something. The New Deal wasn't just about programs and policies. It was about fundamentally reimagining the relationship between government and money. Social Security created a system where the government guaranteed financial security. The FDIC insured bank deposits. The SEC regulated financial markets. For the first time in American history, the federal government took direct responsibility for the financial welfare of its citizens. But FDR's most audacious move was Executive Order 6102, making it illegal for Americans to own gold. Think about that. The president literally confiscated the traditional store of value and forced Americans to use dollars instead. It was the ultimate demonstration of monetary sovereignty, and it worked. By 1940, America had not only recovered from the Depression, but emerged stronger than ever. The stage was set for the most important monetary conference in human history. July 1944, Mount Washington Hotel, Bretton Woods, New Hampshire. 730 delegates from 44 nations gathered in the elegant resort to literally redesign the global financial system. Europe lay in ruins. Asia was devastated. The old financial order was dead. The question wasn't whether America would dominate the new system. The question was, how complete would that dominance be? Two visions competed. British economist John Maynard Keynes proposed an international currency called Bancor that no single nation would control. American negotiator Harry Dexter White had a different idea: make the dollar the world's money. The Americans held all the cards. They had the gold, about 2/3 of the world's official reserves. They had the only major economy that hadn't been bombed into rubble. They had the military power to enforce whatever system they designed. The Bretton Woods Agreement was elegant in its simplicity. Every major currency would be pegged to the dollar. The dollar would be pegged to gold at $35 an ounce, and America would guarantee to convert dollars to gold on demand. But here's the genius part. Only foreign governments could demand this conversion, not private citizens. Americans were still banned from owning gold, remember? This created what economists call asymmetric privilege. Foreign countries had to earn dollars through trade to participate in the global economy. America could simply print dollars to buy whatever it wanted from anywhere in the world. Think about the implications. If Germany wanted to buy oil from Saudi Arabia, they first had to earn dollars by selling something to America. But America could buy oil directly by printing dollars. Germany had to export to import. America could just print. This wasn't an accident. It was the most sophisticated wealth extraction system ever devised, and it was perfectly legal. For 27 years, this system worked brilliantly for America. The dollar became so dominant that central banks around the world held more dollars than gold as reserves. International trade was conducted in dollars. Commodities were priced in dollars. The dollar wasn't just America's currency, it was the world's currency. But there was a fundamental contradiction in the system, and by 1971, it was becoming impossible to ignore. The Bretton Woods system required America to maintain a fixed exchange rate between dollars and gold, but it also required America to supply dollars to the world economy as it grew. Eventually, there would be more dollars in circulation than gold to back them up. This is called the Triffin dilemma, named after economist Robert Triffin, who predicted it in 1960. America had to run trade deficits to supply the world with dollars, but those deficits would eventually undermine confidence in the dollar. By 1971, foreign governments held more than $40 billion, according to IMF records, while Americans' monetary gold stock was valued at approximately $11 billion at the official price of $35 an ounce. France's Charles de Gaulle started demanding gold for dollars, calling America's bluff. President Richard Nixon faced a choice: either drastically reduce government spending, ending the Vietnam War and Great Society programs, or abandon the gold standard entirely. On August 15, 1971, President Nixon chose the nuclear option. I am today ordering the Secretary of the Treasury to take the action necessary to defend the dollar against the speculators. With those words broadcast live on television, President Nixon announced that the United States would no longer convert dollars to gold at a fixed rate. The Bretton Woods system was dead. Nixon called it a temporary measure. 53 years later, we're still waiting for it to be reversed. The immediate reaction was widespread uncertainty. Many currency markets closed temporarily as traders grappled with the new reality. While some markets experienced volatility, others showed surprising resilience. The Dow Jones actually rose in the week following Nixon's announcement. The London gold pool had already collapsed in 1968, but Nixon's move definitively ended what remained of the Bretton Woods architecture. For the first time since World War II, the international monetary system lacked a fixed anchor. But here's what Nixon understood that his critics didn't. America was too big to fail. Foreign governments could complain all they wanted about American monetary imperialism. They could threaten to abandon the dollar. They could create alternative systems. But at the end of the day, where were they going to go? The European economies were still rebuilding from the war. Japan was an emerging market. The Soviet economy was a closed system. China was still largely agricultural. There was no alternative to the dollar because there was no alternative to America. The 1970s proved this point dramatically. Despite oil crises, stagflation, and the Iran hostage crisis, global demand for dollars actually increased. Why? Because when everything else is uncertain, you want to hold the currency of the strongest military and economic power. Reagan's revolution in the 1980s weaponized this advantage. Paul Volcker's Federal Reserve raised interest rates to 20%, triggering a brutal recession but crushing inflation. High American interest rates sucked capital from around the world into dollar-denominated assets. The dollar became not just a currency, but a high-yield investment. Meanwhile, Reagan's deficit spending, funded by selling treasury bonds to foreign investors, created a virtuous cycle. Foreign countries earned dollars by selling to America, then loaned those dollars back to the U.S. government by buying treasury bonds. America discovered it could consume more than it produced indefinitely, as long as the world needed dollars. The Soviet Union's collapse removed the last ideological alternative to the American system. By 1991, there was only one global superpower and one global currency. The 1990s saw the dollarization of everything. Oil prices, quoted in dollars. International trade, conducted in dollars. Foreign debt, denominated in dollars. Central bank reserves held in dollars. Some analyses point to intriguing patterns in how challenges to dollar dominance have been received. Saddam Hussein announced in 2000 that Iraq would sell oil through the Oil for Food program in euros rather than dollars. Libya's Muammar Gaddafi later promoted an African gold dinar around 2009 to 2010 as an alternative to Western currencies. While both leaders eventually faced military intervention, Iraq in 2003 over alleged weapons of mass destruction, and Libya in 2011 during the Arab Spring, establishing direct causal links between their monetary policies and subsequent conflicts remains highly controversial among economists and political scientists. Whether these represent deliberate enforcement of dollar hegemony or mere historical coincidence continues to be fiercely debated in academic and policy circles. But the 2008 financial crisis revealed a disturbing truth about America's monetary empire. It was built on a foundation of debt, speculation, and magical thinking. September 15, 2008. Lehman Brothers, a firm that had survived the Civil War, 2 world wars, and the Great Depression, filed for bankruptcy. Within hours, the global financial system was in cardiac arrest. Credit markets froze, stock markets crashed, banks stopped lending to each other. The ATM machines that dispense the world's money had broken down, and America was the only one who could fix them. But here's the truly mind-bending part. Instead of destroying America's monetary dominance, the 2008 crisis actually strengthened it. When panic hit, investors didn't flee from dollars, they fled to dollars. U.S. Treasury bonds became the ultimate safe haven. Foreign central banks increased their dollar reserves. The currency of the country that caused the crisis became the refuge from the crisis. This revealed the deepest paradox of dollar hegemony. America's financial problems become everyone else's financial problems, but America's currency remains everyone else's solution. Ben Bernanke's Federal Reserve response was unprecedented. Quantitative easing, essentially printing trillions of dollars to buy government bonds and mortgage securities, would have destroyed any other currency. But the dollar not only survived, but strengthened. Why? Because when the Fed prints dollars, it's not just expanding America's money supply, it's expanding the world's money supply. Every dollar created becomes someone else's reserve currency. Other countries couldn't do this. When Zimbabwe printed money, they got hyperinflation. When Venezuela printed money, they got economic collapse. When America prints money, they get economic stimulus, funded by the rest of the world. Barack Obama's Treasury Secretary Timothy Geithner put it perfectly. We have the extraordinary privilege of providing the world's reserve currency. This brings us real benefits. It makes it easier for us to finance our deficits at lower cost. Translation: America can borrow money at lower interest rates than anyone else because the world needs dollars to function. But this privilege came with a price that most Americans never understood. The dollar's role as global reserve currency requires America to run trade deficits. Foreign countries need to earn dollars somehow, which means America must import more than it exports. This is great for American consumers, cheaper goods, but devastating for American manufacturers, lost jobs. The Rust Belt didn't happen by accident. It was the inevitable consequence of dollar dominance. By 2016, this contradiction produced a political backlash. Donald Trump's America First rhetoric was fundamentally about rejecting the costs of global monetary imperialism while keeping the benefits. But you can't have global currency dominance without global trade deficits. You can't be the world's bank without financing the world's economic growth. Trump discovered this the hard way, when his trade wars actually strengthened the dollar by making American assets more attractive. Meanwhile, a new challenger was emerging that would question the entire foundation of state-controlled money: cryptocurrency. October 31st, 2008, exactly 6 weeks after Lehman Brothers collapsed, an anonymous person or group calling themselves Satoshi Nakamoto published a 9-page paper titled Bitcoin, a peer-to-peer electronic cash system. The timing wasn't coincidental. As traditional finance imploded, Nakamoto offered a radical alternative: money without banks, currency without governments, transactions without intermediaries. Bitcoin's first transaction was a message. The Times, 03/Jan 2009, Chancellor on brink of second bailout for banks. This wasn't just technical innovation. This was monetary rebellion. For the first time in history, individuals could opt out of their government's currency system entirely. No permission required, no regulatory approval needed, no geographical boundaries. The implications were staggering. If you lived in Venezuela, you could protect your savings from hyperinflation. If you lived in China, you could circumvent capital controls. If you lived in Iran, you could bypass economic sanctions. If you lived anywhere, you could escape the Federal Reserve's monetary policy. Wall Street initially dismissed Bitcoin as digital tulips, but as adoption grew, the financial establishment realized something terrifying. For the first time since Bretton Woods, America's monetary dominance faced a genuine alternative. Bitcoin couldn't be printed by central banks. It couldn't be frozen by governments. It couldn't be weaponized through sanctions. It was the anti-dollar. By 2017, the crypto market was worth $800 billion. By 2021, it briefly exceeded $3 trillion. Countries like El Salvador adopted Bitcoin as legal tender. Major corporations like Tesla added Bitcoin to their balance sheets. Even traditional banks started offering crypto services. But the real challenge to dollar hegemony wasn't Bitcoin. It was what Bitcoin inspired. Central bank digital currencies represent the final evolution of state-controlled money. Unlike Bitcoin's decentralized anarchism, CBDCs offer governments unprecedented control over their monetary systems. With CBDCs, governments can track every transaction in real time, program money to expire if not spent, limit purchases to approved goods and services, automatically collect taxes, freeze accounts instantly, implement negative interest rates by making money disappear. China launched its digital yuan in 2021, giving the Communist Party complete visibility into every citizen's financial activity. The European Union is developing a digital euro. Even the Federal Reserve is researching a digital dollar. But here's where it gets really interesting. CBDCs could break America's monetary monopoly. Currently, international trade requires dollars because the existing payment systems, SWIFT, correspondent banking, are dollar-denominated and U.S.-controlled. But CBDCs could enable direct currency swaps without touching the dollar system at all. China and Russia are already testing this. Brazil and India are joining. Even America's allies are hedging their bets. For the first time since 1944, there are credible alternatives to dollar hegemony. The question isn't whether America's monetary empire will end. It's how quickly and how violently. We are living through the most significant monetary transition since Bretton Woods, but most Americans have no idea it's happening. While we debate inflation rates and interest policy, the rest of the world is building systems designed to function without dollars. It's not personal, it's practical. China's Belt and Road Initiative isn't just about infrastructure. It's about creating dollar-free trade corridors. When China builds a port in Pakistan and finances it with yuan, those transactions never touch the American financial system. Russia's invasion of Ukraine accelerated this process dramatically. When the U.S. froze Russia's dollar reserves and removed Russian banks from SWIFT, it demonstrated both the power and the danger of dollar dependency. Every country in the world learned the same lesson. If America considers you an enemy, your dollars can disappear overnight. The response has been swift and coordinated. Russia and China now settle 90% of their trade in rubles and yuan. India is buying Russian oil with rupees. Saudi Arabia is considering yuan for oil sales. The BRICS countries are developing their own payment system. This isn't just economics, it's geopolitics. America's ability to impose sanctions, fund military operations, and project power globally depends on dollar dominance. Without it, America becomes just another large economy instead of the indispensable nation. The Federal Reserve understands the stakes. Chair Jerome Powell has repeatedly warned that losing reserve currency status would be catastrophic for American living standards. Treasury Secretary Yellen admits that weaponizing the dollar risks undermining the hegemony of the dollar. But the momentum may already be unstoppable. Demographics are working against America. By 2050, China's economy will likely be larger than America's. India's will be third. The combined BRICS economies will dwarf the G7. Why should a Chinese-dominated world economy use an American currency? Technology is also shifting the balance. Blockchain systems make it possible to conduct international trade without correspondent banks. Artificial intelligence can handle currency conversions in real time. 5G networks enable instant settlement without SWIFT. The infrastructure that made dollar dominance inevitable is becoming obsolete. But here's what makes the current moment so dangerous. America has never faced the prospect of losing monetary hegemony peacefully. Every previous transition, from Spanish silver to Dutch guilders to British pounds to American dollars, happened through war, revolution, or economic collapse. The dominant monetary power never voluntarily relinquishes its privilege. Will America be different? The early signs are not encouraging. The U.S. has already weaponized dollar access against Russia, Iran, North Korea, and Venezuela. Economic warfare is becoming the preferred alternative to military conflict. But economic warfare creates economic enemies, and economic enemies create economic alternatives. If America continues down this path, it risks accelerating the very transition it's trying to prevent. If America changes course, it risks appearing weak to domestic audiences who've grown accustomed to monetary privilege. This is the monetary trap. America can't maintain dollar hegemony without using it, but using it destroys the trust that makes it possible. Let's be honest about what losing reserve currency status would mean for America. Your morning coffee would cost more because Brazil would no longer accept dollars at preferential rates. Your iPhone would cost more because China could demand yuan for manufacturing. Your gas would cost more because Saudi Arabia might price oil in multiple currencies. Your government would face higher borrowing costs because treasury bonds would lose their risk-free status. Your military would shrink because projecting global power becomes unaffordable without monetary privilege. Your living standard, artificially elevated by decades of consuming more than you produce, would adjust to reality. This isn't speculation. It's what happened to Britain after World War II, when the pound lost reserve currency status. Britain went from global superpower to regional power in a generation. But decline isn't inevitable. History shows that monetary transitions take decades, not years, and America still has significant advantages. The dollar represents about 60% of global foreign exchange reserves, down from 70% in 2000, but still dominant. U.S. capital markets remain the world's deepest and most liquid. American technology companies provide the infrastructure for global commerce. Most importantly, America has something no other country possesses: a military capable of projecting power anywhere on Earth within 72 hours. As long as global trade depends on secure shipping lanes, and as long as America controls those shipping lanes, the dollar retains a crucial advantage. It's hard to abandon the currency of the country that protects your trade routes. But this military backing comes with costs that are becoming harder to sustain. America spends more on defense than the next 10 countries combined. Maintaining global hegemony requires a global presence, which requires global spending, which requires global borrowing. The empire that dollar dominance built now depends on dollar dominance to survive. It's the ultimate circular dependency. So what are America's options? Option 1, double down. Use monetary and military power more aggressively to maintain dominance. Impose sanctions on countries that abandon the dollar. Use military force to protect dollar-based systems. Transform economic competition into geopolitical conflict. This might work short-term, but accelerates long-term decline by making dollar dependency feel like foreign occupation. Option 2, negotiate retreat. Accept the transition to a multipolar monetary system while trying to maintain influence within it. Work with allies to create dollar-based regional systems. Focus on keeping the dollar dominant in allied countries while accepting its decline elsewhere. This preserves some privilege while avoiding catastrophic confrontation, but requires accepting reduced global influence. Option 3, digital disruption. lead the transition to digital currencies while leveraging America's technological advantages. Create a digital dollar so superior to alternatives that countries choose it voluntarily. Use AI and blockchain to make dollar-based systems more efficient than competitors. This could extend American monetary dominance into the digital age, but requires massive technological investment and regulatory changes. Option 4. Managed decline. Accept that monetary empires are temporary and focus on making the transition as beneficial as possible for Americans. Reduce global commitments, increase domestic investment, and prepare the economy for competition rather than dominance. This might be the wisest long-term strategy, but it's political suicide in a democracy where voters have been conditioned to expect global privilege. The choice America makes in the next decade will determine not just its own future, but the shape of the global economy for the next century. And here's the most important point. This choice is being made right now through 1,000 small decisions about trade policy, military spending, financial regulation, and technological investment. Most Americans don't even realize they're voting for the future of monetary empire every time they elect leaders who promise to make America great again or build back better. Look at that $100 bill again. Benjamin Franklin's face represents more than American currency. It represents the peak of monetary empire. For 80 years, that piece of paper has been accepted anywhere on Earth because it represents the economic and military power of the United States. People who have never visited America, who don't speak English, who disagree with American policies, still want those dollars because they trust American power more than their own government's money. That trust took centuries to build. It could disappear in decades. The question isn't whether America's monetary dominance will end. All empires end. The question is what comes next. A Chinese century with yuan dominance? A multipolar world with regional currencies? A digital future where governments compete with cryptocurrencies? A chaotic transition period with monetary instability? The answer depends on choices being made right now in Washington, Beijing, Brussels, and cyberspace. Choices about technology, trade, military spending, and monetary policy. For the first time in their lives, Americans might have to compete rather than dominate, to earn rather than print, to export rather than import. It won't be easy, but it might be necessary, because the alternative, using military force to maintain monetary privilege, could destroy the very system that privilege was meant to protect. The age of the dollar empire is ending. The question is, what will America become next? The answer is in your hands, literally. That $100 bill represents the choice every American faces. Adapt to a competitive world or fight to maintain a dominance that may no longer be sustainable. History is watching and waiting for your decision. What do you think? Is America's monetary dominance worth defending at any cost? Or is it time to prepare for a multipolar financial future? The conversation starts now because the transition is already underway.